big deal at all.
That was
So I'm recording this. This is going to be available somehow, some way. I don't know. This is the first one, so I'll have some technical difficulties, I'm sure. But we'll figure it out. We'll be okay. And then ideally, we can make this a regular thing. More people will join, group will join, whatever. People will kind of engage, talk, and we'll kind of see where it goes.
Works for me.
All right, cool. I figured since this is going to be recording, for those that aren't familiar with us and who we are, maybe just a short introduction of yourself, myself, and then we can kind of get right back to it. Sound good?
100%. I'll let you go first because I want to let you go first.
Okay, sweet. My name is Dave. I am with Built by Trading. I've been trading for about 6 years now, in and out of the markets, trying to figure out my way and my process. I really follow technical analysis type stuff. I follow a lot of Brian Shannon, Anchor View app. That's kind of like my base and market structure and things like that. However, over the last year, I've met my now mentor, Babyfish, and he's really opened up my eyes to what real trading is, how to be prepared, how to notice and recognize where we need to be when we need to be there, really introducing the Mark Fisher ACD methodology that is super beneficial and helpful for not only equities, which is what I've always been involved in, but also commodities. And that's kind of what he specializes in, and with his trading group that he's trying to grow and help us all out in our trading development journey. So thank you for joining me today, and I look forward to talking with you. So tell us a little bit about yourself, Babyfish.
Okay, give me 1 second. Just do your thing. Give me 1 second. I'm trying to finish something. Just give me 1 quick second.
Okay, sure. I suppose on the docket list today, I was talking to Brian here, or at least letting him know. John, welcome back. Sully, welcome. Tonight, we're going to start off with the jobs report. What came out on Friday. I don't know if you guys were able to read into it at all or anything like that, but there is some, I don't know if controversy is the right way, but some things that may have been overlooked within the nuance of why things kind of blew out. Whether you believe the numbers or not, I think that's a different conversation. But you see all of this circulating around, trying to decipher what's actually going on, and what actually happened can be pretty challenging. So I think we should dig into that a little bit, make some sense out of what's going on with the market. Then we'll move on to commodities. We'll talk about oil, maybe about the Strait of Hormuz, what is going on with Iran, if anything. There's been some reports of tensions increasing over the weekend, missiles being intercepted from Iran, US, and then even talk about metals as well, because looking over at those charts, they're kind of melting. And so I figured metals could be on the docket this week, especially if there's pressure from the equities side, the ETFs on the metals. They could, if a lot of people are just going to start selling because of potential higher for longer rates or even no cuts. I don't know. We'll see. Then we'll move on to SpaceX and IPOs. I don't know if I'm not a huge space person. However, this is everywhere. So I think it's important to talk about, or at least get an idea of the IPO backdrop, how this might be different, and if this is how this may affect the markets. Then we'll move into kind of like the rotation trade, what could be potentially happening now that money is coming out, might be coming out of tech, and where it could flow to. And then we'll kind of wrap it up. We'll go with that. Sound good?
Yeah, I'm ready now if you want me to go.
All right. I'm ready when you are. Go ahead.
Okay. So as he said, as Dave said, Babyfish, not going to get into the whole reason why it's Babyfish. We'll deal with that at a different time. I have been an institutional trader for a large bulge bracket firm. I've been in the markets for north of 25 years. I started out on the floor in New York on the commodity floor, both the NYMEX and NYBOT. Then I transitioned into doing other things, whether it be equities, still staying with commodities. I've always been on the institutional side and on the money management side and the asset management side. I continue to do that role even today, just in a different capacity, but I still continue to do that. And I'm doing this a long time. I'm not sure what else I should say.
I mean, hey, that's great. That's great. Okay, let's get into the jobs reports.
I think before we do that, let's talk
Yeah,
about
yeah, yeah.
let's talk about Friday's sell-off for a second.
Yeah, okay, let's do it.
So I'm going to give the institutional side of things.
Sure.
The reason why I want to start there as opposed to the jobs report is that the problem with the jobs report, and we'll get into that afterwards, but the problem with the jobs report is that the excuse that was given for Friday's sell-off was jobs report, yields, and Broadcom. That was the excuse that was given. If you look at any single part of financial media, that was the recurring theme that was constantly being said. War, blah, 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 blah. That was the recurring theme. Here's the problem, and this is the problem that nobody's talking about, and I'm very surprised about it, but nobody's talking about this. And I know that we're kind of jumping into the SpaceX IPO, but that really is the most important part here. So I hope you don't mind.
No, not at all. Have at it.
Okay. The deal with SpaceX is very simple. The reason why Musk is going with Nasdaq was because the deal was that in order for SpaceX to get listed there, he has to be in the NDX within 15 days. That's what he has to do. It's not officially out there, but that's the rumor on the street is that he said, I'm not coming to you unless I'm listed in the NDX within 15 days. Why is that a problem? So the first thing is, in order to get put into the NDX, which is the Nasdaq 100, you have to have earnings over a couple of quarters so they could see that you're financially doing well. They don't just slap you in there, just like just like they don't slap you into the S&P. There's a process here. However, with SpaceX is going in 15 days. So why is that an issue? Why would that cause a sell-off? Well, here's the problem. Because the valuation is, I think, at 1.71, almost $2 trillion, something like that.
Yeah.
1.75, something like that.
1.75 to 1.77 trillion.
Okay.
Yes.
Right. So in order to do this, there's a problem now, because if you're Invesco, who runs the QQQ, or your T. Rowe Price, or your Fidelity, or your Vanguard, or your T. Rowe Price, and you have index funds, you have an issue, because now you have to sell all of these other holdings in order to make room for SpaceX. And because of the valuation that SpaceX is supposedly going to have, you're talking about a company that's going to be in the top 10 to even top 6% by weight of the QQQ or the NASDAQ 100. Because of that reason, they have to sell everything in order to make room. So there were tens of billions of dollars of stock that needed to be sold. I think NVIDIA alone was close to $80 billion, just NVIDIA, of what needs to be sold in order to make room so they can put SpaceX into their indexes. Because of this reason, we had this crazy sell-off on Friday. Why? Not because they want to sell everything, but because they have no choice. They have to raise cash in order to make room to buy this IPO, because officially they're not going to do it once it's public. They're going to do it now so that they're ready for it. So a lot of what happened Friday was to make room from a cash perspective to get SpaceX into the indexes. That's why Friday's sell-off happened the way it was. Now you're going to have all these people that are going to say, "Oh, it's the biggest," because I saw this headline all over the place. It's the biggest point drop in Nasdaq in history. 4% move is a 4% move. It doesn't matter. And I just got the weekend video up finally. It doesn't matter. As these suckers go up, a 4% move is a 4% move. The numbers are going to be big because it's 4%. They are making room for SpaceX, whether they like it or they don't like it. They have no choice. So this was, to a large extent, a forced selling in order to raise cash so they could do it. There's no choice here. Now, are we going to bounce back and all of a sudden make new all-time highs? We'll see. We'll see. Is SpaceX going to be a dud of an IPO? We'll see. We'll see. I'm thinking that it might be a lot very similar to when Facebook went public. Facebook went public a few years ago at 40. If you are the investment bank that is bringing this thing public, the IPO price was $40. In order for this to be successful, you cannot go below $40. That was the way Facebook was treated. So Morgan Stanley was the lead investment banker on the IPO. and they were defending $40 all day long. It came out on a Friday, all day long. As soon as it got to 40, there was massive buying. It never dropped below 40. It dropped below 40 at 4 o'clock once the market was closed in the post market. But during
Mm-hmm.
that, up until 4 o'clock, it never broke 40. Whatever the IPO price is going to be, that's going to be defended, because otherwise it's going to be a disaster. So that will be defended, and we'll see what's going to happen. So right now, we're in a situation where you have forced liquidation in order to raise cash. Now, could it continue for a couple of more days? It could. The worst is behind us. That's for sure. The worst is definitely over. Now, why do I bring all of this up before we get into even the jobs report? In an age where you have electronic trading and in an age where everything is ETF centric, especially in stocks, selling begets selling. As these ETFs need to start unloading stock, there are more ETFs in the market than there are stock. So because of that reason, all these ETFs start selling. They have no choice. So the machine just keeps going. Me and Dave were talking about this earlier on Friday, how the selling was not violent. It was very, very controlled, which you knew right away it was a machine. Now granted, I knew right away it was ETF liquidations, and it was what it was. But that's what this was. Now, am I going to sit here and tell you, I want to put a disclaimer, that I got it right on Friday? I did not. I was testing levels. They didn't work. It is what it is. I got out of the way. It is what it is. But just to understand what the backdrop is, at the end of the day, they're making room for SpaceX. If SpaceX wasn't coming, we would not have sold off on Friday like we did. Plain and simple. Continue. Sorry.
Yeah. No, that's perfect, because I was on that route, because there's a lot going on in this market overall. And I didn't think that necessarily the jobs report was the only thing that could have caused this. I think it's necessarily like a small piece of the puzzle, part of it, potentially an excuse. I mean, the fact that memory and chips have run so far in such a short amount of time, like it's only a matter of time until those names come crashing down nearly as quickly as they went up, right? Especially with that kind of extension in a short period of time. And so it's almost as if the market was kind of looking for an excuse, looking for a reason to sell off. I was kind of looking at it that way in that point in time while it was live. And then I kind of put the pieces together a little bit later on the SpaceX IPO. And my thought process was basically around what you were saying. Like, people, if it's coming to the Nasdaq and just the public markets, they're going to be forced to sell so they can make room for this public offering and holding as well. Do you know the details on lockup periods? I was reading, and from what I know, it's like what do they call it? The dribble. It's a dribble period. They're not allowed to. It's more so like over time, over a smaller amount of time, they're able to sell a little bit, and then you can't sell an X percentage, and then you can sell a little bit again, instead of like at the typical, 6 months, you can just unlock the supply of it. Do you know any backdrop about that?
I don't. We are researching it, so I'll know more a little bit later on this week. Right now, I don't.
Sure.
What I do know more than anything else is that the company itself, from its roadshow, the company itself SpaceX is not really making money like a regular company. It's a whole different type of business. It's a rocket business. And the problem with the rocket business in general is that it's not a very profitable business. For why? Well, if you look at what happens, there's so many factors. It costs you billions of dollars to build a rocket. Something goes wrong, this thing explodes before it even gets into space, and billions of dollars just went away. So it's a very high risky business. The other thing that they're talking about, which makes absolutely no sense, but they're talking about how they're going to put data centers in space within 2 years or something like that. He has something like 2 to 3 years he wants to put data centers.
Yeah.
A data center is like the size of like a city block. Satellites themselves are like the size of a car, and they take forever to get into space. How is he going to get a freaking data center that's a block into? I mean, the whole thing doesn't even make sense.
Yeah, I mean, he was talking about FSD being live in like 2017, right? So he was a little bit of a decade off behind that.
It's backwards, yeah.
Shoot for the stars there.
to bring to your point about stuff pulling back, you have to understand something. We've talked about this, a little bit of the group, but we've talked about this, that the problem is, if you look at, let's say, a SanDisk, I'm going to use that as an example.
Yeah.
How many shares can you buy at $1,500? Who's buying this? Like, how many can
Right.
you buy? So really what the game now is, because the market to a large extent has become a casino, it's become an option market casino between zero
Mhm.
DTE and all these gamma squeezes that are happening. That's what's pushing all these things up. And the problem you have is that these guys are the weak hands, but you get the computer that comes in, and the computer sees everybody's buying, the computer front runs, and the computer just keeps pushing everything up. So you're in a situation now where things can keep going and going and going and going. Are we in a bubble? I think the problem is, and we've talked about this a lot, but
Mhm.
it's worth repeating. I think the problem that a lot of I would like to call them the old school guys, but the old school guys have, and this is, I think, something that it personally took me a long time to come to terms with this, because I was thinking the same thing. The participant has changed, meaning you used to have human beings. I would even say, and I'm going to say this as, it'd be very controversial, I would even venture to say that Mark Douglas's book doesn't even apply in today's market. Why? Because the participant is not a human being anymore. The participant is a machine. The
Mhm.
machine does not worry about all these things. The other problem is the participant is a bunch of, and I say it all the time, but these meme crazed guys that everything is a meme, and they just go in there, and you get a million people buying ones and two lots of one contract of options, two contracts of options, whatever it is. You get a million of these people, they could blow any fund out of the water. Any fund can be blown out of the water. Anything. It used to be hedge funds control the markets. The hedge funds do not control the market anymore, with the exception of the two market makers that are really big in there, which is Jane Street and Citadel. It's really Wall Street bets. Those guys really control the market, because you get a million of these guys, 2 million of these guys, and they're all buying ones and twos and threes of options. They could blow any fund out of the water. And you saw it with GameStop. They could literally blow them out of the water.
Mhm.
So it's knowing who your participant is and knowing what goes on. And the worst part is they don't sell. They never, ever, ever sell. As long as their options don't expire or they buy stock, it never, ever sells. I saw something recently, and I actually saw this yesterday. It shocked me. Portnoy I saw a clip of Portnoy. Portnoy was talking about crypto. And I'm switching, but I just to understand who the
Oh
participant
yeah.
is. And he was basically complaining how he bought I think XRP. He's long a ton of XRP, and he's long a ton of Bitcoin. And he kept
Sure.
saying how, buy the dip, buy the dip. He goes, I've been buying the dip, I've been buying the dip. This is the problem. But then he said, I'm down millions of dollars, millions. I have no more money to buy the dip. He says, so I'm just sitting there. That's what these guys do. They don't open their statements. They don't open their platforms. They never look. They never, ever look, and they don't care. And that causes the problem, because now you have a participant that refuses to sell. And that's why I say Mark Douglas, to a large extent, his whole theory doesn't work anymore, because that participant and that mentality is no longer there.
Well said. I mean, going to Bitcoin just quickly. That's kind of the mentality of that whole, Bitcoin culture, HODL, right? Hold on for dear life, never sell, et cetera, et cetera. And a lot of people are getting hurt right now. That's for sure. But it's definitely getting hit. It's definitely in a bear market. But you hear a lot of things going on with that. All right, going back to it, we'll ignore
The jobs
Bitcoin for
report.
now.
Yeah, let's go back
No,
to
no,
the
no, no.
jobs
Hang
report.
on, hang on,
Oh,
hang on.
sorry.
I want to go to the defense, linking defense. So I'm trying to see what's in play. I've been obviously, some of my universe. I've expanded it a little bit, but for sure, defensive plays. LMT, RTX, NOC. Do you? Because they're also involved in this space theme, right? With SPX, SpaceX coming out. Do you think it's going to be tailwinds or headwinds? What are your thoughts on that for the defense group?
It's a different business, because they're really, right now you have the war going. So it's just a different business. Like, Northrop and Lockheed and Raytheon, that whole entire, I know it falls under the aerospace and defense, but the reality
Mhm.
is SpaceX is, as stupid as this is going to sound, SpaceX is Mars. This is planet Earth. So,
Sure.
I think that they'll be fine. I think that the bigger issue you have is that there was some news today that basically it looks like the war has restarted. There was attacks today, and now Iran is attacking. Like this is every day it's
Hmm.
something new. So I think that for now, those guys are still making money hand over fist. They just are. Um, they got hit just like anything else. But I think as a group, as long as the war goes on, then you could be long these names, because they make money. Now, are they have they gotten a little bit meme crazy? Sure, like they all get meme crazy. I mean, Lockheed, they all at some point get sucked into that. If you don't want the whole sector if you don't want individual names, you can just pick up the whole sector. There's an ETF called the ITA. You just pick
Yeah.
up that. You can just sit in that, and then at least you're a little bit more insulated from it. But
Well,
I think,
I found
yeah.
a pretty. Sorry. Go ahead. My bad.
No, go ahead, go.
I found it pretty interesting because you would think that these guys probably are making a lot of money with this, right? However, their stock prices um, have not supported that really ever since the war started. They've actually gotten crushed.
Hmm.
They've gotten hit pretty well. So how do you? Because my thesis was, okay, war is starting. They're going to make money. Stock goes up, right? Trying to keep it simple. That's not what happened at all. So what, like, my mind goes to buy the rumor, sell the news. For that, you sell into this buying because people think that they're going to be making money, so you sell into that, and then it looks like they're starting to base, and now you have earnings. They make money on earnings, they report that from the war, et cetera, and then we can have an upturn. Am I correct on that thinking, or is there another route to it?
I mean, Lockheed is back to where it was in October of 25. It's in a good spot. This is a good spot. If you wanted to buy Lockheed, this is a good spot to buy it because your risk is so defined. You know you're trading against. You're trading against $500. It's so
Right.
this is so easy. Look at, let's say, Northrop. You go to Northrop. Oops. Northrop also is pretty. Northrop's a little bit more complicated. Let me go weekly for this. I can see. You go to
I was
Northrop.
gonna say.
Northrop's a little bit more complicated, but this 540 is kind of like a good spot. And you've got your low. You could even trade against the 200. 200's 512, roughly 511 and 8, 511.80. The problem is it depends on how you want to look at this. If you're looking at it from a trade, they're not trades right now. They're definitely not
Yeah.
trades. If you're looking at it from an investment, different situation. Depends on what your time frame is and what you're looking for. I think the bigger issue is that you have to understand something. In this market specifically, if you're
Mhm.
looking for trades and not um, investments, you got to be in
Mhm.
the names that are moving the market. You have to be in them. You have no
Right.
choice because otherwise you're getting left behind. Like you're literally
Right.
getting left behind. I'll ask a different question. Micron. Okay, if you look
Mhm.
at Micron, okay, from the beginning of the year till today, can you explain to me what changed in that business? Why it's now up 400% from where it was January 1? Could you explain to me what changed? Outside
In
of
the
they had good earnings, what changed that justifies a valuation that this company has? SanDisk Costco. Could you explain to me what changed? And if you're going to say DDR5, I hear it. They're already producing now DDR4 to make up for DDR5 because they know they can't get it. So all these
Mhm.
companies are now doing DDR4. So tell me what changed that justifies the valuation that these things have outside of meme crazos. Tell me what changed.
Yeah, I can't do that. I can't do that. Um, it's all from the whole AI memory build out. Chips, memory are going to be needed. That's what it is, and that's the hot theme and topic right now. So I couldn't tell you business wise what has actually changed. I don't think.
And that's my point.
Yes. Yep.
Your participant is buying things and they're just doing things that are just crazy. Like if you
Hmm.
look at and the market makers to a large extent are facilitating this. Market makers back in the day would never ever do this because that wasn't their job. Their job was plain and simple: fair and orderly markets. They would not let stocks get, I'm not going to say that they wouldn't let, but stocks could never get crazy. Like if you look at, let's say, Nvidia moves on an average day for 3 to 500 billion dollars. It basically gives birth to an S&P company every single day. Why is the most valuable company in the world moving like this? It makes no sense. It just makes no sense. but that's who you're dealing with. That's the participant. That's what you're dealing with.
I can see, yeah, that goes back to what you were saying earlier. This market is about who the participant is right now, not
Correct.
necessarily the old school, old style thought process of trading and whatnot. Very good.
Correct.
All right, good stuff. Thank you. All right, let's move on to the jobs report. Obviously, the report numbers were 172,000 jobs added, 85,000 was expected. Unemployment rate stayed steady at 4.3%. There was upwards revisions that added 93,000 jobs back in March and April. Average hourly earnings 0.3% month over month, 3.4% year over year. So moderate. Not, I don't think that's much of a change prior. But the biggest thing, I guess, was the 70,000 jobs added from leisure and hospitality gain, right? And a lot of that was it seems to be 48,000 in the food and service, drinking places, bars, things like that industry. And from what I was reading, a lot of this, which actually makes sense, what's coming up? The World Cup. It starts in mid-June, right? And it goes to mid-July. And it seems like a lot of that was baked in to this jobs report. And going back to what we were talking about earlier, how does this how do I ask this? Does the reaction from Friday, taking out what we said about SpaceX, would this reaction on Friday potentially be overblown? Because the way that I think about this is that, okay, job market is quote unquote hot again with these numbers coming in. The Feds, they're not going to theoretically need to cut rates, so that brings in the potential higher for longer or even hike rates to maybe cool things down. That puts pressure on the high flyers, big tech, rate sensitive names. However, if those jobs, the 48,000 or so, those might not be all like full permanent long time. And so let's say end of July, it ends, the World Cup ends, and now the next jobs report comes in and it says, hey, this jobs report was a lot lower. Is that going to feed the rate cut cycle again and we just go higher? Like, what's the right way to wrap your mind around this?
Well, two things. Number one, everybody's convinced that Worsh is going to cut.
Mm-hmm.
Worsh is a hawk, plain and simple. Worsh is a massive hawk. He wants to reduce the balance sheet. So he doesn't have to necessarily do anything rate-wise. He just has to just let the balance sheet run off. And that in of itself is a what's it called? Is a hike. Just that alone. So, and he's been a very big believer in that, and he's been very consistent in that.
Mm-hmm.
Now, the reality is the job report real? To be honest with you, you have to look at it from a different vantage point. And the vantage point you have to look at it is, we're creating all these jobs, whether they're real, you believe it, you don't believe it, that's a separate discussion.
Mm-hmm.
The problem that you have now is that with AI and all this stuff coming, so to speak, the change that you have to ask yourself is, are we maxed out? Are we topped out? Meaning, we know that these big companies are all getting rid of people. We know it because they've said that they're doing it.
Mm-hmm.
So what is considered now full employment? Where are we? Where is that level? I don't know. I have no idea. But and if you ask there's a lot of smart people out there that are saying the same thing. Where is full employment now? Because if those jobs are being, to a large extent, phased out, so where is full employment? So therefore, and where is the unemployment rate need to land in order for there to be full employment? So I don't know what the answer to that is. What I would also say is, I don't believe that these numbers are accurate. I don't. It just doesn't make sense to me. Given the
Mm-hmm.
fact that you have the Doge cuts, you have this, you have that, things are going. I'm not being a conspiracy theorist. I'm just saying, it is what it is. That's the data that was the data that was released. So I mean, like, I can't really hang my hat on everything and say, well, I don't believe it. Okay, so I don't believe it. So I'm a conspiracy theorist. But
Sure.
if you think about it in like the next, let's say, couple of months, hospitality and leisure jobs never last. They're not that's not going to grow your economy. And
Hmm.
the reality is you can't even look at it from that angle. You have to look at it also from what's the hourly rate. I happen to have not parsed through so much the report only because of the fact that I think it's a BS report. So I'm like, yeah, whatever. I kind of just give it, kind of glaze over it and just move on because there's nothing in there that I could say, okay, it's real. I believe in it and whatever. Again, it's a little bit conspiracy theorist. It is what it is. But the way I'm kind of viewing it is more from the sense of what happens in 6 months? Are those jobs still here? So you bring up the World Cup. I happen to have forgotten about it. So thank you. Those
Yep.
jobs are not here. In 6 months, those jobs are gone. So now what?
Right.
So, where do we go? I don't know. The jobs report to me, I think a lot of these econ reports at this point in time, you kind of have to take them with a grain of salt because
Sure.
I think they're manipulated because at the end of the day, Trump needs to have, and I don't want to go Trump, 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 but Trump needs to get the market up. He needs to keep that market up. That's why, if you noticed, at the end of the day on Friday, after we closed, there was an announcement made how the government may start investing in AI companies. Like, it's everything to keep this thing up. It's everything to just juice it up. For whatever reason, if you look out at and you look at real data, you look at CPI, you look at PPI, those numbers were not good numbers.
Hmm.
PPI especially. So prices are going up. So I think it depends on how you want to view it.
Right. Yeah. From my understanding, from everyone else that I listen to, much smarter people than myself, such as yourself, um,
I'm not so smart.
they all they kind of point to the same thing of like things might be perceived as all fine and good. However, this data is not necessarily supporting that, right? And so if you want to be fully objective and go with the data, then that's you have to go with the data, not just what's being fed to you. And also, I saw that I think Trump posted on like whatever it was, True Social. He was pretty upset about the jobs market like report being super good. He's like, the market's supposed to be going up on a great jobs report or something like that. So like, we all for sure know that he watches the stock market,
Of
right?
course. Well,
I just
listen.
thought he's got
Well,
his thumb on. Yeah.
listen. Look how many trades. Look how many trades he was done that have been attributed to him in Q1. I'll
Right.
ask you.
Through his efficacy report, right?
Right.
Or whatever it was.
I'll ask a different question. Okay. I'll ask
Uh,
a different question. I'll ask this. I guess, can the audience respond to this, or they're not able to respond?
um, I
They
can
able
make
to,
it. Yeah, we got Saul in here, John and Brian.
okay. Let them be able
Um,
to type.
yeah,
Let them be able to type.
yeah, for sure. They type in the
Oh, okay.
responses. Yeah, Brian
Okay.
says he's in the car with others, so he can't
Oh, never
chime
mind.
in
Fine. So I'll ask a very simple question.
those 30 minutes. So
What
yeah,
president? What president looks at the stock market on a day-to-day basis? Nobody.
yeah, great question.
So
Yeah.
I'm not making, again, this is not me, let's bash Trump. No. The thing is, again, it falls into that same thing I said earlier about the participant. The participant is different.
Hmm.
So it just falls under that category. Can you blame him? No, I understand why he does it. But the problem is, and again, Trump is not bad. It falls under the same category as the old school guys. The old school guys always used to look at, I'm talking about the Paul Tudor Jones, the guys who are ahead of me, that are basically a generation or whatever, are a little bit older than me. The old school guys knew the stock market was never the economy, but it was a barometer on where things were going to be in 6 to 9 months. That no longer applies. So Trump still falls under that category. He's still, to a certain extent, he's in that group with Paul Tudor Jones. Not that he's a trader, but that age bracket where the stock market is, to a certain extent, kind of a barometer on the health of the economy. The
Hmm.
stock market today is a gambling casino. Plain and simple. I hate to say it. It is a gambling casino. It's a gambling casino and a high yielding savings account. Stocks are supposed to be risk assets. There is, I can't believe I'm even saying this word. They're not, they're riskless. To a certain extent, stocks are riskless. If you buy the index, to a certain extent, it's riskless. As stupid as that sounds, it is. Because you know you're going to get saved. You know
Hmm.
it's not going to go down. So where's the risk? You buy an individual name, you definitely run the challenge of getting your clock clean. But if you're buying the index, you're buying Mag 7, it's riskless, pure riskless.
Right. A natural bid. Right. Very good. All right. I had another thought, but it slipped my mind. Either way, we can't put too much into the jobs reports. Those. Oh, that's what it was. The part of the job report for like the construction workers, like blue collar jobs, that was actually unchanged. Like true
Manufacturing.
economic, thank you, manufacturing jobs, that was unchanged, right? So that kind of, I think that's a better measure of the actual like job employment, more of I don't know, structured, a firm one, not one that is so volatile, such as hospitality, if those jobs are not going to be there after the World Cup ends, right? So those weren't unchanged. Let's talk about oil.
Wait, time out a second.
Oh,
But the World Cup is also
yep.
regional. The World Cup is not going to be in all 50 states. So you have to kind of consider that as well. Because it's not
Yeah, for
just
sure.
you have to look at it from a regional perspective also. Where are the jobs? And are those jobs going to go away afterwards? The answer is yes, but where are they? So it depends on, the World Cup's in New York. Where is it? I know it's in New York, in New Jersey. Where else is it?
Great question. No idea. I can find out.
But that plays a part also, because from a regional perspective, what happens afterwards.
Yep.
Anyway, sorry.
Right. No worries. No worries at all. Good stuff. All right, let's talk about oil. Iran, U.S. tensions might be rising a little bit again over this weekend. We're intercepting missiles. I guess Israel and Iran, they continue to have conflict over there. Oil, CLN, July futures contract opening up around 92, 93 bucks. From your perspective, I mean, this has been actually kind of hard to trade, in my opinion. You get that nice push trading wise when the war initially started, but really all the calls that we all saw going around, oil's at 150, 200 bucks, et cetera, that never happened. It kind of shot up to this 105 to 90, 100 range, somewhere around there, and just really has not done anything. Where do you see things going? I know you kind of specialize in oil and energy and things like that, so curious on your thoughts.
I think for now, whether you're bullish, bearish, price is truth, as much as that's a stupid answer, but it's really what you have to deal with.
Mm-hmm.
The curve is not really getting it right from the fundamental side. From the supply side, it's not getting it right, but it doesn't have to. You have a situation now where, to a certain extent, sentiment is very, very bullish. Very bullish, right? Would you agree with that?
Yes.
Okay. You have a very well-respected energy analyst, Jeff Curry, out there talking about tanker, line bottom and tanker bottom, and he's 100% right. He is 100% right. Here's the problem, and we used to have this on the floor also years ago. The problem is sentiment is all pushed onto to one side of the boat. As the market goes down, all these guys that are all along, they got to get out. So whether or not they're right, they're being forced out. So which is pushing the market lower. Right now, the market is a sloppy, choppy mess. We're basically trading 103, 105 on the upside, 92 on the downside. To a large extent, that's basically where we're living. So we're basically in like this, $13, $14 range. I think the range potentially changes to about 88, 89 to about 101, 102. Still stays in that same $12 to $13 until we get to the point where we are at line bottom, and then all hell's going to break loose. But until then, I think the market is a sloppy, choppy mess. There's trading to do, bullish or bearish every day. You just can't look at the bigger picture, because the bigger picture right now is not getting it right. And that is causing all kinds of problems. Now, there are a lot of people on X, a lot of smart people, and they're all putting out very, very good stuff regarding the fundamental story about why oil should be up. The problem is oil doesn't want to go up. So if oil doesn't want to go up, then you can have everything you want, possibly, but at the end of the day, it's not going up. As a matter of fact, the ranges are getting more and more compressed. Whereas at one point they were $6, over $6. Now they're like 4 and change. So the ranges are getting very compressed, which means that the interest is not there like it once was. The thing that kind of shocked me was I thought that the same guys who were sitting there trading GLD and SLV, I thought those guys would jump into USO. They did not. And I think that's one of the reasons why oil never rocketed to 150, 200, if not higher, was because those guys never went into it. If they would have, we'd be having a different conversation. I think oil right now would be sitting at 120, 130. But those guys never went into it. They never went into the options. They just never pushed it. Now you would say, oh, it's a physical commodity. True, physical commodities work a little bit differently than paper assets like stocks. But at the end of the day, they never went there. And you would see there was at one point, we talked about this, a lot in the room. At one point, SLV volume, just the ETF, was dwarfing SPYs and Qs on a daily basis. You were seeing 500, 600, million contracts trading, shares trading in these ETFs. And the SPY was doing like 50, 60 million. So you're talking about 10 times the amount. Yet they never went to USO. They just never went there. Why? I don't know. It's a good question, but they never went. I think that kept a lid on prices.
Yeah, that was my next question for you, is why don't you think we actually went to those high claimed prices, right? And it again, going back to what we were saying earlier, it's a participant of the markets nowadays. And so for whatever reason, the people that were driving high volumes in SLV, I remember we were talking about that in the room. They just didn't go to USO.
Yeah, these
right?
guys.
Is that basically what you're saying?
Yeah. I'll even go a step further because you and I talked about this. It was one day, I think it was a week ago or 2 weeks ago. Micron option volume, just Micron, was more than SPYs and Qs combined. That's a gambling addict. That's who you're dealing with. And they never went to USO. Had they gone to USO, we could have seen oil at 200 plus. They just never went there. For whatever reason. Why? I don't know, but they never went.
Well, since we're talking about metals, let's talk about metals. They obviously, just like everything else, got smoked on Friday. Why do you think that is? I don't necessarily understand the trade mechanics of, I'm going to link it to the job reports. Why do you think, just answer this. Why do you think metals also got hit on Fridays? What's the backdrop of that? I'm not sure how to think about metals myself.
Cash raise. Plain and simple.
Yeah. Okay, plain and simple. Just literally sell everything to make room for SpaceX. And
No. Not from the SpaceX perspective, but more from when equities are going down 4%, 2%, everything is going to go with it. The reason being is because you have still, if you're fully exposed on an equity perspective, and you don't want to sell your equity holdings, you're going to sell other things in order to make sure that you have enough money to keep your positions. Margin debt is at historical records. So you're going to sell whatever you got to sell in order to keep cash so that you don't get margin called. So, and again, the computer, why did oil get hit? So the computer just sells. When a sell program hits, the computer just sells. It doesn't care. It will sell whatever it has to sell because it's programmed to do so. I think right now, where are futures now? Hold on, I can't even tell. I'm afraid to go out of
the. What do you want? Future what?
Where are equity futures?
I got them open.
Where are equity futures right now? Yeah, where are they?
We are looking at 73.93.
Now, what's the percentage?
Percentage down.
If we're down, then yeah, sure.
Yeah. I gotta figure out.
Where's tech?
Tech is at 29 42, 29,042.
So we're below Friday. No, we reclaimed Friday's
No, we're
lows.
above. Yeah, we're above. We're open on tech or green on tech. 14 ticks or so.
So that's your answer.
Yeah.
Right now, I know they're naturally buying things because things went on sale a little bit. But if you really look, did things really get killed? Not really. Not really. You know, Google's doing an $89 billion offering. Stock looks pretty damn good. I mean,
Oh yeah. You want to talk about relative strength on Friday? Google was insane.
Yep.
That was interesting to watch.
Apple too.
Yeah. Yeah. Apple. Yep. Apple as well. There's some, which is basically what you're looking for, especially on days like that. You want to look for the relative strength, right? A lot of the names got hit. A lot of the memory and chip names got hit. Metals got hit. Things like that. Going back to the metals, what was your price predictions or your thoughts on gold and silver? I forget what you said. I'm pretty sure you said we're coming back down though to some price. Am I correct or no?
For the year or now?
Yes, for the year. For the year.
I think silver is 50. I think silver's back in 50.
Mm-hmm.
I think gold potentially gets back to 3,800. Platinum, I'm unsure of. To be perfectly honest, I'm unsure of it.
Sure.
I have to do a little bit more of an analysis. I haven't really been focused so much on it anymore. But I think gold and silver are. I think they're going to. I think they're just. I don't want to say they're ahead of themselves, but I just don't see a scenario right now unless something drastically changes that they take out the highs that they made this year. I think that's over. I think that's completely over. I think silver is probably back to 50, maybe even in 27, it's back to 30. I think gold is going back to 3,800, and then you figure it out, you know. And depending on who you are, you know, we know who some of the gold guys are. You know, they keep pushing it. You know, I understand their logic to it. You know, it happens to be we are going to be releasing continuing the commodity series, not like a plug, but we are going to be talking about gold. So coming down the pipeline, there's going to be cocoa this week and then gold.
Awesome.
The thing with gold, I get it, but you're living in the past of what gold is not. It's not money anymore. It's not used as money. You know, and I understand that the thought process behind it, used for 5,000 years. I get all of that, and the argument makes a lot of sense. But you have to remember, Nixon took the U.S. off the gold standard. Gold is not used as money anymore. Central banks, whether they're buying it or not buying it, and I understand people are jumping up and down. I get it. I totally understand the argument. But you have to be also not as blinded to it and just say, okay, I got to buy it. Then you're making fun of Sailor and Bitcoin, but you're doing the same thing. You're doing it with gold. Now you want to say one is made up and one is, you know, an asset. You can make that argument also. You could also make the argument that Bitcoin has to be changed into dollars. I get all the arguments. But if you look at from an investment perspective, if you look at gold in the 1980s till today, the S&P destroyed it. S&P was, I think, 600 back in 1980. No, gold gold was like $400. The S&P destroyed it, and the S&P gives dividends. So as an investment, you have not been paid. Now you want to sit here and say inflation and all these other things. You could make all of these arguments from today until tomorrow, and they're good arguments. But just cold hard facts. What's been the better investment? What's given you a better yield? What's given you more? You can't really make a case for gold.
Yeah, you can't argue with price. Price is price. Percentage moves are percentage moves, right?
Right.
So have you looked at the ETFs or any of the metal equity names at all recently?
I just look at the futures.
Would you say that a good majority of futures movement is all, I don't want to say reliant, but is at least connected to GLD, silver, and maybe even the mining equities?
Not
Yes
anymore.
or no? Not anymore?
Not anymore.
Why do you say that?
Because you used to see at 9:30 every morning when GLD and SLV opened, you would see the GCs and the SI, they would move. That stopped happening. That relationship stopped happening, which
Yeah,
tells
that was
you
back in like November, December with
even
the memers who were in there,
yeah,
right?
even in Q1, you had it. You know, that relationship is over. They're no longer in control of it. So that just tells you that that trade is over.
Okay. So my thought process here was I'm looking at all the metals, SLV, GLD, FCX, SSCO, SCCO, copper, things like that. And I'm trying to see if there's a correlation between those, what the, let's just say SLV and GLD are doing. And right now they look like they have a decent chance to break down out of what could be a distribution. And if it does start to break down and potentially start to downtrend, my thought was that, hey, maybe metals futures, they become in play and it might be time to look for shorts. But with what you said, that process is most likely wrong.
But here's the problem. It's a good theory that you're using. The problem is that CME did not lower margin requirements. So from a cost perspective, you might not even be able to be in silver on the futures.
In gold.
Gold
well,
too,
let's say I was. Let's say anybody. Let's say that wasn't an issue. Would that make sense or no? Or is that correlation still too far to even touch each other?
I'm not sure, so I don't want to say. I'm not sure.
That's fair. That's fair. I'm going to keep watching. I'll be curious.
Yeah, I think your better place to be for now is, at least if you're looking if you're trying to find a commodity equity relationship, I think your better place to be right now is going to be energy, and it's going to be agriculture. Those are going to be your better places to be.
I don't even think I have any agriculture equities.
You're having, for example, coffee breakdown is now into 2024, into where it was back in 2024. You're having, obviously you always have the ethanol relationship between sugar, corn, and crude. So you have that relationship kind of moving. Wheat, beans were really, really rocking and rolling. Now they're rocking and rolling on the downside. They were a great trade on the upside. Now they kind of lost their friends on the upside. So they've been getting smoked. You have cocoa, which did wake up. It's actually moving around a lot. What's interesting with coffee, just to bring this to a head, is that coffee prices on the physical beans in the stores are going up, but coffee futures are going in the exact opposite direction. The exact opposite direction. I think we got down on Friday into the 240s, which tells me now that we're probably going to 220 on the futures. I think that's where we're headed. That one I actually got wrong. I actually thought coffee was going to be higher, just like I thought cocoa would be. Cocoa I got right. Not because I'm looking for a pat on the back. I'm saying cocoa I got right. Coffee shocked me because, again, coffee beans, at least on the retail level and in the stores and on the commercial level, are going up, but yet the coffee futures are going literally in the exact opposite direction, which I thought was kind of interesting.
Right. Well, speaking about correlations then with the market, with futures, you said energy. So Exxon, Chevron, LNG, VLO, Halliburton, Marathon. You think those are the names to be in right now? Even though oil is chopping around, not really doing anything, these names have also been somewhat doing the same, even though MPC is actually breaking out, which is, I think that's a good place to be in. But how do these, even though oil has been staying up here, I know we had a conversation before, is if oil is too high, it is still a problem for these I think it was more so for the refiners, correct?
They don't make money. They don't make as much money.
Right.
They don't make as much money. That's where they start to run into real problems. And the funny thing is that where oil is right now, you're going to have an issue where usually you have maintenance season. They're not going to go into maintenance because they can't. They literally cannot go into maintenance season. So they're kind of
What
forced.
is maintenance season?
They shut down. They shut down production. They shut down refining, so they could just maintain.
Oh,
They do it every year, but they can't do it now. So they're being a
okay.
little bit more careful. These guys make money. I'm not saying that they don't make money, but they're not making money hand over fist like everybody thinks that they're making money. Everybody just assumes that higher oil prices is good for them. It's not good for them, because then
Right.
you get the demand destruction. You get a lot that goes wrong that they can't deal with. So you have to be, I don't want to say careful, but you have to be careful. Like, you have to be careful with these guys. You
Mhm.
can't assume that because they're that they're fine. You just can't. You got to be careful with it.
Awesome. So rotation. Let's go back to there. XLK tech obviously got hit. Now we're looking at XLF. We had some rotation, especially over the last week, into financials and even healthcare. Is that a signal to you at all, or no?
Not really. Not really. Because at the end of the day, tech, in order for the market to go higher, you need tech participation. Tech
Right.
is not, is tech really getting whacked, or is tech just being rotated so that they can make room for SpaceX? I don't think
Right.
they're leaving tech. I just think that they're just rotating it to get cash. Plain and simple. Like after if you even look at what the SPY at the S&P is the biggest weights. Okay. Yeah, so SPY weighting. Let me see a quick thing here. SPY sector weighting. SPY sector weighting. Here we go. Tech is 38.6%. After that, it's financials at 11%.
Mm-hmm.
Financials are not moving the needle on the sucker. Sorry. They're just not going to move they're not going to move the needle on this thing. In order for the
Right.
S&P to stay up, it needs tech. So, and the powers that be that create the index, they know this. So they're not going to let anything fall apart.
So that was kind of my point. If the market, obviously, again, tech is a huge way. You would just say 36, 38%, somewhere around there. XLF is next at 11%. You're right. That's not going to move it. The way that I see it is XLF was only down 0.21%. On Thursday, it was up 2.59%. To me, that's rotation out of tech into financials. And even if you look at healthcare.
Well, let me ask you a question. Why would you look at XLK as opposed to QQQ?
I mean, I'm just looking at the text. I'm just going sectors route.
Okay. Got it.
Yeah, just matching sector to sector. That's all. Not overall QQQ 100 names. So, and then if you look at XLV over the week, they were up 2.37%. They got a nice push on Wednesday, Thursday, and even closed up 0.61% after gapping up and selling off the lows of the day, basically, on Friday. So to me, that's rotational. That's money moving out of tech into, I don't know, less risky names such as healthcare and financials. And yet you are saying that it's to raise cash, which I see both. But my point is how do you know? How do you know? I don't know where to look to see if it's mostly cash raise versus how much was actually rotated into other names and other sectors. Because XLV and XLF, they're breaking out of bases. If you want to go a technical analysis route, and they look like they're about to head higher to potentially make a run for the highs. I don't know. You never know, right?
Well, if you look at
But
XLV, hold on. So you bring up XLV.
yep,
If
sure.
you look at XLV, that's a shooting star on Friday.
Right.
That's bearish. That is not a bullish candle. If you look at candles,
Yeah.
that is not a bullish candle.
Right. I'm not saying just based on one day, but if you look at it's been in consolidation from let's give it a range 151 to 143, 142, if you want to count that low down there, right?
Okay.
So it's popping out of that range. My point is if it holds this range. If it holds above 150 and starts turning up, is that a signal? Is that important to know? Or do you think it's still not rotational and they continue to put money into tech no matter what?
Well, let me go a different question.
Okay.
Okay, if you're getting in at 150, what are you looking for? 160? What are you looking for? 158? What are you looking for in this thing?
Yeah, if you're getting at 150, I mean, I can see it can make a run to one. Well, you got to get past 153 first, I suppose. But as long as it gets past 153 and holds above that, sure, you can make the 160, find some supply at prior all-time highs, get a little pullback, and maybe it breaks out. Just thinking potential scenario wise, I have no clue, obviously.
Well,
But
I
that's what
mean,
I'm looking at. I'm looking at bigger. I'm not looking to trade this. This is too slow for me. I'm just trying to figure out where the next trade is. If there is rotation, where do we go? If it is out of tech, where is the focus?
well, it's very simple. If rates stay where they are, financials are not the place to be.
They're not. What I thought financials benefit from higher rates.
So here's the problem with financials. Okay.
Okay.
Financials, they borrow on the short end and they lend on the long end. That's the way they work. That's why everybody looks at the twos and tens, because financials are borrowing on the twos, which would be the short end, and the lending on the tens, which is the long end. Okay, that's the way it works. Okay, they make money on the spread. It's called net interest margin. That's how banks make money. Okay. Now the problem is, I'm putting my old investment banking hat on. Problem that you have is that let's just use the 30-year mortgage, okay? Because a lot of banks are lending on that. Let's use that as an example, okay? So the 30-year mortgage right now is, I think, last time I checked, I think I checked Friday. I think it was like at 6.75, something like that. I could be wrong on that number. It's in the 6 range. Okay, let's just say that. I don't remember exactly. The problem is the banks are not lending you at 6%. They're lending it to you at 7%. That's what they're lending you at. Okay, you go to take out a loan. Okay. Here's the thing. If you own your house and you refi during COVID and you've got a 3% rate, you're not going anywhere. Even if your mortgage is paid off, you're not going anywhere. Why would you give up on a 3% to go take out a 7%? That would be insane. You're not going to do that.
100%.
So, from a lending perspective on the mortgage side, the banks are going to run into a problem because no one's going to borrow money. On the credit card side, where everything's against prime, yeah, so they're sitting at 30% credit cards. When that changes, I'm not sure. I think there's going to be legislation that's going to change that. I have a feeling it's coming because it's legalized loan sharking, plain and simple, and everybody knows it. And the banks can make all the arguments that they want, that they need to do it, and et cetera, et cetera. They have all the arguments that they want. At the end of the day, it makes no sense. However, the defaults on credit cards are record levels. So anything that they're making money on, so to speak, they're losing on charge-offs. So they're not really making this kind of money that everybody's kind of quote unquote thinking about. The investment banks are a little bit different because they're going to make money on fees on the IPOs. So you always hear every year there's a backlog of IPOs, a backlog of IPOs. Whether or not these IPOs come to market or not, they'll make their money on fees. I'm not saying not. However, the banks in general are almost to a certain extent like utilities because they're not really, yeah, they make money. I'm not saying they don't make money and they get record profits and et cetera, et cetera, et cetera. I'm not saying that they don't make money. But reality is if you're looking to make money as a trader, you have to be, to a certain extent, you're kind of forced into high flyers. You don't have a choice. You have to be in high beta tech. Because if you think about it like this, okay, if you're trading small size, you need massive moves in order to make money. You need massive, massive moves. If you're getting into, and I'm not saying you're doing this, but if you're getting into, let's say, an XLF or an XLV, how much money are you really going to make as a trader? I'm talking about from a trading perspective, not an investment, a trading perspective. How much money
Yeah,
are you really going to make? You're not going to get a massive move. Listen, XLF right now is $52.30.
Mm-hmm.
How much do you really think you're getting out of this thing? So it goes up $10. I mean, like what? So you're kind of forced to be in high beta tech. You're forced to be in Netflix. You're forced to be in SanDisk. You're forced to be in Micron. You're forced to be in Nvidia. You're forced into them because you have no choice.
Right.
So, depending on how you're looking at things, if you're looking to be an investor, that's a whole different ballgame. But if you're looking from a trading perspective, I mean, I hate to say this, but you're forced into these things. You don't have a choice. Otherwise, how much money are you really making? Like, what are you making? It'll take XLF, a month to move $10. Okay, so you move $10. Okay, congratulations. So what are you
Mm.
getting out of it? It's like, that's why I'm saying the market is not a place right now where if you're not in high flying names, as stupid as this sounds, it's very difficult to make money. And I'm not talking about make money like make millions. I'm not talking about that. I'm talking about to just make money is very, very difficult. It's very, very difficult. It's not the same thing that it once was. The beauty about, to a large extent, I know I'm switching gears for 1 second, but the beauty about being in commodities, depending on the commodity, is you're dealing with with markets that are completely and totally, to a certain extent, professional based markets where you don't have memers in there. You don't have market makers that are manipulating things. You just don't have it. It's pure. When you're dealing with
Hmm.
a pure market, it's a lot easier on a trading basis. It really is a lot easier. I'll go a different route and then I'll shut my mouth, but I'll go a different route. Why is everybody attracted to NQ? Why does everybody go to NQ?
Because it moves.
That's the only reason why they go there. They don't go there because they want to be, I'm in trading NQ all day long. They could care less. They're going
Mm.
there because that's really what's moving. So because of that reason, their hands are forced. That's why they have to be there. Not because they want to be there, but because they have to be there. Now, you have to understand something, that a lot of what we're talking about right now is about to change because they told PDT. I think this is the first official week that PDT is no longer there. The FINRA perspective, they're kind of phasing it out still, but most brokers already have gotten rid of PDT. So what effect is that going to have on stocks? I don't know. Honestly, I don't know. I'm not sure.
Yeah, that's gonna be pretty wild. You want to talk about gambling casino mentality? Like, is this really a good idea? We talked about this. Probably not. I know I saw Robinhood officially removed the pattern day trading.
So did IB.
Um,
Yeah, so did IB.
did they? Do you know Schwab did? Do you know any
I don't know.
others off the
I
top
don't
of
know.
your head? I don't know either. I'm gonna have to look
If
into that.
IB did it, then Schwab did it also. They all did it.
Yeah.
Yeah,
Mm,
because they're looking
cool.
at it as they're about to make money hand over fist. So all these idiots, they're going to be pushing buttons all day long.
Yeah. Yeah. You gotta
Which
learn
begs the
something about
question:
this.
how do you approach this week? So the reality is, you have to look at it from two different vantage points. You have to look at it from the vantage point of SpaceX is coming on Friday.
Hmm.
You have to look at it from the vantage.
No, hang on. You're breaking up.
Let
Dan,
me
you're
keep
breaking
that.
up. No, you're out. I can hear you now.
Okay, yeah, I just had a brownout. Sorry.
Yeah, you're good. All
Okay.
right. Just all right. Last thing you said. How do we look at this coming up this week? We got SpaceX coming out on Friday. We had the pattern day trading rule removed.
Oh, that was bad. Sorry. Um, yeah, sorry, I just had a brownout, so I wasn't expecting that. That kind of caught me off guard.
Oh, it's all good. It's all good.
Hold on
All
one
right.
second.
So pattern day trading removed.
And they
SpaceX coming on Friday. How do we move into this upcoming week?
you gotta focus on yields. You gotta watch what they're doing. You really your new thing that you have to kind of pay attention to is um you got to pay attention to yields. Really, what you got to be watching the socks. You've got to be watching the nicey fang, and you got to be kind of paying attention to that stuff.
Hmm.
You're bigger. If I think the market does not care about the Trump headlines anymore. Those are basically out the window. Nobody cares about those anymore.
Yeah.
Um, and you kind of have to look at it that way, and kind of see how things maneuver. Maneuver in that regard. It's going to be a little bit more squishy, so to speak, because you really have to pay attention to a lot of stuff. It's not so much, at least from a trading perspective. It's not so much about where the market could go, because markets could go anywhere. It's
Mm-hmm.
really trying to understand what the clue is. So if you watch the NYSE FANG, and it's probably my go-to index because it's pure. And for those of you that don't know what it is, basically the NYSE FANG is 10 stocks. It's Mag 7 plus Mag 7 plus Micron plus what's it called? Plus I forgot what's in it already. They keep changing it, so that's why I forgot. It's Micron and the three others. I forgot what's in it. I know it's Micron and Palantir, and I forgot what the third one is. But it's basically, it gives you a better idea of what high beta tech is doing. So that
Mm-hmm.
becomes important. You got to watch the stocks, because the stocks basically, to a large extent, is what everybody is kind of focused on. There are a lot of guys who are watching the SOXL, which is the direction triple leveraged SMH to a certain extent. People are watching that. People are trading that. So you kind of have to watch that stuff along with the TNX, the TYX, to kind of see and kind of gauge what's going to happen. Do I think we're going to have a massive move this week? I think it's over. I honestly think the worst is over. I really think it's behind us. I think that really what you're looking at now is, what do they do for the remainder of the week heading into SpaceX? I think from the angle of the sell-off, I think that that's over. I actually do think it's over. I think the worst is behind us, and that's the end of that. Could there be a little bit residuals? Yes. I think if you're bearish and you're looking to sell, you do not want to see 50% of Friday's move get taken back. If 50% of Friday's move gets reclaimed, then it shows you there's no commitment to that move. So you kind of have to
Mm-hmm.
watch that. In general, when you see igniting bars like you saw on Friday and anything, in order for you to see commitment, you never want to see more than 50% get retraced. If 50% gets retraced, you know there's no commitment to it. That's why, to a large extent, intraday, when you used to see these Trump pops, you would get these big moves, and it would just be 100% retracement. There was no commitment to it. So you kind of want to look for that. I don't think you can take anything off of oil right now. I think oil's trading in its own world. Natural gas is trading in its own world. To a large extent, commodities by themselves are trading in their own kind of world. So if you're commodity specific, you can stay commodity specific. I think correlation wise, from a stock perspective, I don't think right now you can really trade one sector against the other, because the rotation trade, you hear about this all the time. They're rotating one on Monday, on Tuesday rotating back, and on Wednesday they're rotating back. So you can't really focus that way. It's really more a question of, to a certain extent, you really just have to focus. I know it sounds stupid, but you really have to focus on high beta tech. As long as high beta tech is acting somewhat stable and it's kind of holding where it needs to, then the
Mm-hmm.
market will be fine. The market will be stable. The only reason why we got creamed on Friday is because high beta tech, there was no bid. There was literally the market was bidless. You and I have seen this many times. They'll move it down and they'll rip it 100, 150, 200 handles. There was no bid.
Yep.
The most you got was 50 handles. That was basically nothing. They
Yeah.
basically did
No,
not move that sucker. There was no bid,
it
and
sold
they
all
closed
day.
it on the dead ass lows. So
Mm-hmm.
are we bouncing now 30 handles? Okay, so we're bouncing 35, 36, 40 handles. Even if we were to bounce, let's just say, even if we were to bounce 300 handles, you're still, in order for you to get back 50% of your Friday's move, we got to be at least 750, 800 handles. That's a big move. Now, could it do it? Of course it could do it. But you have to ask yourself, if they sold everything on Friday because they needed to make room, are they really going to be in a rush to buy it back this week? What, so they could do it all over again?
Mm-hmm.
What's going on? So I think you have to be a little bit more, leery of what's going to happen. I think once SpaceX is out of the way, that's a different situation. So I think next week becomes a little bit more interesting. Um, I think this week is going to be kind of squishy in that regard. I think you just have to a certain extent, play it day by day, day over day. I think you have to ignore the noise. I think you can't sit with a news feed anymore, because the news coming out, there's no way to interpret it, because what you would think, up is down, down is up. So it's kind of like, a little bit more difficult in that regard. It's a hard market. I'm not going to say that it's not. is bubblicious and all these other words you want to throw out there is one thing. From a trading perspective, it's very, very hard. And I would say this one last thing before I shut up. I think in this situation, the more you know, the worse you are. And that applies to me because the more I know, the worse I am. Because you have so many, you're trying to interpret all this information and try and figure out what to do and how to do it. And it's very difficult. It's making life very, very difficult. This is probably the hardest. This quarter alone has probably been the hardest quarter that I have seen in 5 years. Easily the hardest quarter. Easy. And we're not even done yet, but it was definitely the hardest quarter.
Yeah, the good old paralysis from analysis, right? Sometimes ignorance is bliss. Whatever other one you want to toss out at it. Sometimes knowledge is not the most beneficial. It can be freeing, but sometimes it
yet again?
No, can you hear me? No, I can hear you. Can you hear me? Dan. Either way, Solly, John, Brian, I sent you guys an invite to speak. If you guys got any questions or want to talk about anything, pop on in.
I'm not sure if I got kicked out or not.
All right, Dan, can you hear me? I can still hear you. I don't know if we got technical difficulties or not. Solly, John, Brian, someone comment at least so I know that we're live still.
Am I? Yeah, I had a brownout, so I'm kind of having like issues. Okay. I hope I didn't talk to myself for like what's it called? No, I cannot hear you.
Oh, interesting. Okay. Still live, listening in. Okay, Solly can hear me.
Can you hear me?
Yeah, there you go.
Yeah.
Right. That's on me. I'm
What's up,
having
John? How we doing, buddy?
Power issues.
Good.
Welcome to the world of summer.
Yeah. Dan, can you hear John at all?
I'm going to drop off. I'll say thanks, Cobb, for letting me be here. Maybe we'll do this again next week. Hopefully I won't have these issues. I hope that you guys got some value from whatever I had to say. And
it was good.
Once again, thanks, Cobb. So
yeah, no problem, Dan. Let us know, where can we find you? Give us your socials.
I'm not sure if you can hear me or not. So if someone could tell me if they hear me, that'd be great.
I hear you.
I'm talking to myself.
Yeah, Dan, we hear you, dude. I'm typing them onto him on Discord, trying to let him know.
I don't think he hears us.
Are we going to do this again next week? I think we should. What do you think?
Yeah, man, let's do it. We can make this a weekly thing. Let's do it. Look at your freaking Discord.
Okay, good.
Whatever. All right. I'm going to. You can find me at Bill by Trading.
We'll do this again next week, and then we'll do info and everything. Because right now I feel like I'm just talking to myself. So I'm going to thank Cobb again for inviting me, and I'll let Cobb post the info because it's his show. So we'll see you again. I'll see you guys next week. I'm going to drop off because I'm having all kinds of issues over here. So I want to wish you all a good trading week. Be careful, be smart, and I'll see you next week.
Sweet. Thanks, Dan. Appreciate you. You can find him at babyfish_TG on X. You can also look him up on YouTube as well. He does weekly YouTube videos on commodities and overall market views and things like that. He's our mentor. He leads our group pretty well. So if you guys are interested at all, share, like, subscribe, all that good stuff. And it sounds like we might be doing this next week, which is pretty great. So keep an eye out for what might be to come. John, Sully, Brian, you guys got anything?
Hey, I just want to say it was good. I'm glad I joined.
Yeah, no problem. Thanks for joining.
Let's do it next week for sure.
Right? I would like to make this a regular thing. I think it'd be pretty cool.
Guys to come in here.
Yeah, I mean, whatever. It is what it is, but we'll push it and whatnot.
Yep. Sounds good.
Cool. All right, guys. I am going to end the space. Thanks again for your time. Thanks for joining. Trade well per usual. Manage your risk, and I'll see you in the room.
Okay. Bye.
Later. Bye.